Hello, friends, and welcome to the Optimized Advisor Podcast, where we focus on optimizing the well-being and best practices of insurance and financial professionals today. On this show, our objective is to help you optimize your life, optimize your profession, and learn from other optimized advisors. I'm your host, Scott Heinela. We hope you enjoy the show. Hello, Jamie Kosharek.
Good morning,
Good
Scott.
morning. Absolutely. Hello, President of Producers Choice Network. We'll talk about that a little bit. And also our virtual guest, Mr. Scott Stolz, head of insurance with Insurance Solutions at Simon. One of my very first questions will be, what the heck is Simon? I'm sure we'll unpack that. But thank you for joining us.
My pleasure. Happy to be here.
So previously, your role was the president of the Raymond James Insurance Group, which is how you and I met. But I'm curious, how long have the two of you known each other?
Good question, Scott. How long has it been?
I don't know. Probably it has to be 7, 8, 9 years. I'm trying to figure out at what point we kind of stumbled across each other in our Raymond James career.
It was at least 2009, because that's when we had that strategic partnership with 2000. It was near when we were rolling out with the AOE at Raymond James, because we were part of, as we did a lot of annuities and insurance. I know we supported and participated in some of that beta and that development of that system. So
And,
15?
Scott, I think you can just put it down. It's been long enough we can't remember.
Fair enough. So in all seriousness for a minute, right? This podcast is, and this conversation is about, in my objective, three things. One, we want to learn a little bit more about you. Number two, we want to learn more about your current role and what Simon is, how it serves the insurtech, insurance solutions world, financial solutions, things of that nature. And then also, I have this here. We want to talk a little bit about the world of annuities.
I'm surprised you were able to find a book, one of those copies. It's flying off the shelves so quickly because, just everybody can't wait to get their hands on a book on annuities that, I think Amazon's having trouble keeping it in stock personally.
Well, I went on this morning when I got to the office to order another box of 50, and it said back ordered until September 8th of 2023. That's how in demand you are.
In that case, if that's what it said, you were at the wrong site, I'm afraid.
It's a good book, honestly. Like, for anybody who wants to learn more about and understand annuities in all seriousness, it's very well laid out. I would like to know from you why you decided you would actually do this and your how. How did you do it? I'm always curious about the why and how somebody authors and writes a book, and certainly on the topic of annuities.
Well, so I had done a lot of articles, individual articles in annuities, whether it be for Raymond James or different financial publications. And I kind of just had them all in a file someplace. And I thought I've pretty much written a whole book by this point because they were all on different topics. So it seemed to make sense just to put them all into one book format. And it really, in some ways, was easy because I just self-published under Amazon. They make it easy. It's the writing and rewriting and the editing. And then if it takes some time to get it done, then you've got to go back and read the old chapters again and update them. It definitely takes a commitment to say, I'm going to be done by such and such time. Otherwise, it'll just go and go and go. But that's really what it came down to more than anything else. I just felt like I'd already kind of written it, and I figured I would just put it all in one place.
From beginning to end, how long did it take?
It was probably about 2 years from beginning to end, but I'll be honest with you, Scott, a good portion of that, probably 12 to 15 months of that, was because I just set it aside and didn't pick it up for several months.
Right.
If I had actually sat down to do it and been disciplined about it, probably could have all been done in 3 to 4 months.
Yeah, it's a very interesting. I mean, this is the space we live in, right, Jamie? It's annuities, life, long-term care. We represent the insurance space. In your career, in your tenure, obviously you've represented the insurance space, Scott, and we're passionate about it. I am passionate about it. And so when I find good content on the profession we find ourselves in day out, I'm a big advocate. So kudos to you for that.
Well, thank you. I appreciate that. I'll make sure you get a free copy of the consumer version when it's done.
Oh.
So, and that shouldn't be too much longer.
Okay. That's what my next question was. Will this be the last book? So it sounds like there's more on the way.
Yeah, I figured that when my wife sat down to read it and couldn't get down through the first chapter because of how some of the jargon, and I thought I had written it about as simple as possible, I decided that there needed to be a consumer version that was, is there something more basic than 101? Because I thought I'd written 101. So I guess the next one will be just one. I don't know.
One for dummies.
So that must be it.
101. Yeah. What's your take on Tom Hegna's, like, his Paychecks and Playchecks book? Do you feel as though that's a financial professional's book, or is that a read from a consumer standpoint?
I think it's kind of somewhere in the middle. So,
Okay.
and you know, and there is always a temptation when you write a book like this to fall somewhere in the middle, because you're like, well, yeah, I want advisors to understand this, but hey, it would be really great if consumers read it too. And so you tend to default into that middle category, I think.
Yeah, it for any financial advisor, insurance professional wanting to learn a little bit more and kind of unpack the conversation of annuities, where they fit, the different features that they do have, and some of the intricacies of the products, it does a very good job. So moving on, prior to joining Simon, you spent 15 years as the president of Raymond James Insurance. You have 40 years of experience in the
Don't
insurance.
push it quite that far. I'm still only at 38 and a half. I'm not
Okay.
ready to admit to 40 years in the annuity space, to be honest with you.
38 plus.
38 plus.
There you go. And so prior to Raymond James, what was your, tenure in the insurance space? Or was it investments, not insurance?
Well, I actually started out of college at Edward Jones in their home office. I'd been interning there my last year and a half of school. And they said, hey, we need an annuity product manager. Do you want to take that role? And I thought, product manager out of school, that's pretty cool. And then my next question is, what's an annuity? And I actually went looking for a book on annuities. They didn't exist back in 1983. So pretty much just learned the whole thing on the job. If somebody would have suggested, I really thought at the time that was just going to be a stepping stone to whatever I did next in the investment side of the business. But so if someone would have suggested I'd spend almost 40 years all in the insurance and annuity space, I would have thought that was nuts at the time. But from Jones, I went and started working for what was then Sun America. It became actually it was Sun Life Insurance Company at the time, became Sun America, and then became AIG. And I had multiple roles with them, everything from running from national sales manager to running all of their insurance and annuity operations. Once I got on the operations side, I started moving from one company to another that kind of needed someone to help them fix their service. So I spent some time in North American Security Life, and my job prior to Raymond James was I was running insurance and annuity operations for Jackson National.
Now at Sun Life, they were responsible for one of the first index annuities, right? Was it the Keyport?
That was, I think they bought that. They bought Keyport after the fact, but at Jackson National, they also had one of the first index annuities, a product they called the Equity Linked Index Annuity, or ELI for short. And that came out in 1996, I believe.
Interesting. So how did a product like that sell well based on expectations within the insurance company's projections?
They were happy with what the sales were. It was obviously hard because it was a very different concept for the annuity space back then. But there was a key advantage. Interest rates were much higher back in the late 1990s, which means the rates were much higher. So I remember Jackson bringing out, when they first brought out the ELI product, they were offering the NASDAQ, I believe it was a 5-year point-to-point with 140% participation rate. And so that made it pretty easy to sell. If you brought out a product like that today, I mean, you'd sell so much of it, but their sales were definitely limited by the fact that it was such a unique concept in the space at the time.
Well, and also the market where, I mean, obviously the 90s were, booming. So you had, I'm going to guess treasury rates 9, 10%, something along those lines.
Something like that. Yes.
And the
Yeah.
market was, I mean, on a tear.
Right.
So that's always my interest is its mindset perspective. And did advisors struggle with selling a product that was so attractive they just didn't see it in front of their face, or did it sell well because it was positioned properly? I'm always interested in that conversation.
Well, there was also a lot less need for protection back then. So everything was about variable annuity sales. There were no such thing as living benefits or anything like that. It was just selling tax deferred growth. So I remember a couple of years ago at a Raymond James conference, I was talking to one of the Raymond James advisors about the annuity business he was doing. And he talked about how his business in the annuity space shifted from variables to index as his clients got older. So as the baby boomers aged and their need for protection grew greater, you've seen this shift, in my view, in the annuity business, in the types of products being sold, simply because the main buyers have gotten older. But think back in the 90s, the baby boomers were in their 40s. They were looking for tax deferred growth. They weren't looking so much for protection. So index annuities even then weren't really about the protection as much as it was that, hey, this is a way for me to a different way to invest in the NASDAQ.
And I'll bet you the minimum guarantee on the product was probably 4. I mean, at least 3.
I think it was 3. Yes, that's
Yeah.
correct.
Amazing. Okay, moving on, Simon. So what is Simon, and what is specifically your role there, and how is it serving the insurance and financial services space?
So the annuity industry, pretty much ever since I've been in it, certainly for the last 20 years, has had this need for better technology to make it easier to do annuity business. If you talk to any advisor about what do they hate about the annuity business, they will all say it's just so hard to do, whether it be the application process, the compliance process, the fact that they have to go to multiple systems to get different information. It's not all in one place. So Simon's goal is to create the platform for annuities that is the one stop for everything you do that need to do for annuities. Everything from the training aspect that you need to do to recommend a particular product, to the product information you need to select the best product, to the data you need to make the right allocation within the product you select, to submitting the application. And then finally, even after the fact, Simon will provide the ability to look at all of your entire book of annuity business, and somewhere down the road, even do transactions against that book directly through Simon to the insurance carrier. So that's our goal, is to build this one-stop platform that allows you to do everything that you need to do with annuities. And I would say we're about 75-80% done at this stage. Fortunately, it's one of these platforms that you can use it as we build it, because everything we build, in my opinion, is that it's better than what's out there. But getting all the pieces complete in one place, that'll probably be another couple of years before it's all completely done.
Why do you think, Jamie or Scott, that insurance has been so archaic in terms of antiquated technology, where we all know in today's day and age, pick it 15 years, it's been that the acceleration of growth is predominantly driven by technology and efficiencies. Yet the insurance world seems to operate in this very inefficient space almost by design.
Jamie, you want to take a shot at that one first, or you want me to?
Well, gosh, Scott, with 38 years, why don't you start?
Well, it's if you think about it, it's almost like as we get more technology, it's overcome by the additional requirements that are out there. So let's go back to the 90s. A fixed annuity app was one page.
Right.
An index
And no
annuity app,
suitability.
no suitability,
Yeah.
right? Very limited, right? Jackson National, because it was a different product, they required everyone to take a test on their product before they could sell it. But that was their requirement. It was not a state requirement or a distributor requirement. So you didn't have all of those. There was very little suitability, very little compliance regulatory part. And so now these apps are 40 pages long. And so the technology, in my view, simply has not developed at the same rate that the requirements of doing the business has gotten worse. And so, and on top of that, it's not like the insurance carriers and the insurance industry is really big at standardization. So one of the biggest challenges we have at Simon in getting all this data together is that it's hard to find standardized data. You can't find it in one place. You have to go and get it from multiple places. So it's never been, Scott, to your point, it's almost by your comment about by design. The industry has never really worked together to standardize anything, which makes it that much more difficult. They can't even agree on what the right term should be for different product types or features within products, et cetera. And so it's like a moving target.
It really is. And the other aspect of that too, I think that plays into that, I think, is just, insurance companies are a spread business, and interest rates have done what since the 20 years and 30 years you've been in the business, they've come down. So we've got this compression. Are they really working relative to their scale and volume very profitable, or are they challenged with that to provide consumer benefits, i.e. a competitive product, compensation that fits the model of that firm or that advisor that's representing it? And I think those are challenges as well. But on the flip side, I know that if I can create a process that's more streamlined, that's more efficient, the workflows help move the pig through the python, then ultimately I'm going to win. So it's just this very strange environment that the insurance world finds itself in. And I'm always challenged with, well, why not just make certain investments in technology that's literally hitting you right in the face? Simon is a perfect example of that, and maybe the savior for a lot of these insurance companies and institutions that should be representing these products to say, okay, here's something that can help us with implementing these products on a more wide-scale basis.
Yeah, we're starting to see that very much so at Simon, as far as the demand on our time, is that some of these insurance companies are now seeing not only the value of the tools we have, but they're almost seeing us as an outsourced IT shop for them. And so they're asking us to do things and build things for them that they know it would be difficult to build themselves. And we're happy to do that to the extent that we can find the resource to do it, because it gets us more ingrained with all the carriers and gets everybody more reason to use us. But there is certainly no question that, the focus seems to be on the insurance company side on product development and product design. And ease of doing business and operations seems to be more of an afterthought, and we'll spend money on that if there's money left over. But I'll give you a perfect example. I'm sure that you guys, whatever auto insurance you use, you probably have, if you don't have it, you probably at least have the ability to have an app on your phone that allows you to file a claim. You can access your insurance cards. You can pay your premiums. You can look at everything from this app. I've never seen an annuity app from any annuity carrier. I can't do anything on my annuity that I own from my phone, and other than going to the website through my phone. And I'm blown away that no company has decided to do that yet.
Will Simon have some form of an app at some point?
Well, right now, our focus is on providing tools to the advisors.
Right. Okay.
It's not a tool for consumers.
Got it.
So I think the problem we would run into is the distributors would have an issue from a compliance point of view if depending on what we would put on an app. But so that's not the focus today, but I got to believe at some point. We do everything from our phone, and we can't require people to continue to go to their laptop or their desktop to do something.
So one of the big challenges that we run into with annuities and advisors is specifically the post policy management side of the utilization of annuities. And what I mean by that is the statement aggregation and the portfolio integration. So I'm an advisor, I'm managing $1 million for a client's portfolio. Annuity person walks in, right? Okay, I get it. This makes sense for this client's financial plan and objectives. I'm going to reposition percentage of the portfolio into XYZ annuity that fits. And lo and behold, it kind of disappears off of the statement. Does Simon help with that? And then the other part of that is if not, or if it does, why don't we see more of that? That's a big problem for consumers and advisors alike.
Yeah, so at most distributors, the way they'll solve that is that they're going to get a feed from the insurance company that has and it's going to come through DTCC, and it's going to have the client's account number with that distributor and all the policy information. And to the extent a distributor has that functionality, they're able to put it on the client's statement.
Mm-hmm.
Now, the point that you're making is that that's functionality the distributor needs to have. And that becomes more challenging depending on what type of firm you're working in. If you don't have the access to the DTCC files, then you got to get it directly from the insurance company, and that's a huge process. So the way that Simon, we're not involving ourselves at this point with the statements itself, but what we're trying to do is get all of this aggregated information that a distributor has for all of their policies. We get it through the DTCC. Then we augment that with additional information that the carriers provide us. And in some cases that the distributors provide it. So we're becoming the new consolidator for all of this information.
Mm-hmm.
And then we present it on the Simon platform to the advisor so they can now see all of the policies in one place with a lot of detailed information. I suppose thinking about it wouldn't be hard for a firm to take that information if they need to and develop put it on their statements as well and get the information from us. A firm like Raymond James doesn't need to do that, but I could see some firms that perhaps would need to do that. And if we can be the data provider, we're happy to do that, because that's really, at the end of the day, we're in the data business.
It's interesting, Scott. It's almost like Simon, you guys, as much as we talked about, what are the challenges and why has it taken the industry so long to catch up with some of the technology innovation. But I mean, that's kind of, Simon is kind of becoming that industry standard. Not that maybe that was the intention or the goal that was set forth, but by becoming that one-stop shop for an advisor, what you're doing is having insurance companies look to conform to aggregate their data and information to be on the Simon platform, where advisors are finding a lot of value in the simplicity of use, which I think is going to be transformational as we move forward and try to integrate advisors to leveraging annuities and insurance, where I think there's a big opportunity for us.
Yeah, I agree 100%. I mean, we know that if we can get information that's useful in the advisor's hands, and there happens to be, let's say, a carrier that, for whatever reason, is not providing us the data we need, and so either their policy information isn't there or isn't as complete, eventually that advisor is going to tell that company, well, how come I can't see my policy information on your policy here? And therefore that carrier is going to have to either give it to us, or that advisor is just going to sell some other product.
Yeah. It's a very interesting, just the conversation of creating this. I mean, does Simon have any competitors?
Well,
I'm just thinking through, like, gosh, wow, this is the one-stop shop, or that's the ultimate objective, right?
So in my totally unobjective opinion, right, as the head of insurance solution for Simon, I would say the answer to that is no. There is another company that is trying to do what we're doing. Interestingly, we both started out in the structured note space and providing IT solutions to the structured note business, and then both basically said, well, a lot of the challenges on the annuity space are the same ones as the structured note space, so let's move into there. And so there is another company that's trying to do that, but no distributor really needs more than one of these platforms. And so once we're into a distributor, it's very difficult for any competitor to replace us.
So who's the direct customer? Is it broker-dealer firms, the financial advisors, RIAs, I mean, insurance-only agents?
Anybody who does annuity business of any kind. So it's really the advisor, and whatever their firm is who our customer is.
Got it.
Now, I would also say that the insurance companies are our customers as well, because they use Simon as a marketing tool to show their products. But we're trying to drive usage through the distributors, through the individual financial advisors, knowing and understanding if we're successful with that, the insurance companies will continue to work with us and expand what they're doing in our system. But it all starts with, you've got to have a platform that everybody's going to use.
So let's just walk through, Mike's. I'm an advisor. I'm an agent. I want to log into Simon, the system. I'm going to enter into an application. I'm going to start an account, if you will. And the first thing it will take me through is a process to verify that I'm valid in terms of product training.
Correct. So it starts in the learning center. And this was actually the first thing that Simon brought out. And one of the key challenges is this NAIC product training that you have to do before you can recommend any product.
One of the banes of our existence.
Exactly. Right. And so this was the insurance company's answer to the NAIC requirement that they must make sure that whoever's recommending their products understands the products and is trained on the products. So therefore, they all develop these individual training modules. It is one of the largest issues as far as not in good order for an annuity, is that the advisor either didn't know that they needed to do the training, or they did it and became obsolete because the product changed and the insurance company decided you needed to do 2.0 as an example. So we host all of the product training for 24 different carriers. I think we've got over 260 different product trainings on Simon. So you start there, and you can see in one spot which modules you've done, which ones you haven't. It's all real time with the insurance companies.
Wow.
So that we know which ones they have done and haven't. And once it's completed, then we notify the insurance company it's done. So you start there, then you move into selecting the product. Now, where Simon really takes over on the product part is, once you've decided which product you want to recommend, you have challenges, particularly with today's product designs, on how do you allocate the money within it. I mean, take a indexed annuity as an example. It's not uncommon for an indexed annuity to have 20 different choices.
Right.
And you may have to choose between, do I do the cap rate on the S&P with the fee, or do I do it without the fee? And then what do I do it with a spread? Am I better off with a participation rate, a 40% participation rate, than a 5% cap, which is going to give me the best returns over time? Or do I do a combination of the two? And do I do an index other than the S&P?
Right.
And all of these choices. And so we have the analytics that allows the advisor to understand the trade-offs, to understand that a cap rate of 4% is going to give you historically about a little under a 3% rate of return, and a cap rate of 7% with a 1.25% fee is going to give you a return of about 3.7. So you're going to get more, but you've now created a 20% chance that you're actually going to have a negative return one year because the market went down and you've got a 1.25 fee. So we provide the data that allows you to ask the questions about the different options and have answers to those questions. And we even give them a suggested allocation. You know, you never want to be just one put all your money into one of them, you're probably going to be better off in multiple strategies within the same product. So we'll plot an efficient frontier that will say, put 30% in this one and 20% in this one and 15% on this one, et cetera. So we help with advisors using the products more efficiently. Then once you're done, you click on the indicate interest. If it's a distributor that we've worked with their online order system, it will launch that system automatically, and you complete the app and off it goes electronically. That's the basic process.
So it then connects to, let's say, a Firelight, or does it connect specifically to the app entry system within that given insurance company, or it's a third-party online application tool?
Yeah, there's three primary solutions within the annuity space. There's Firelight, there's iPipeline, and there's eBix. And every distributor that has one has one of the three. Nobody's got more than one of the three. And so what we do is we interface with whatever platform that distributor uses. And think of it as like we're a front end. We're not replacing the annuity order entry system, but instead of leaving Simon and going to Firelight, you're directly interfacing with Firelight through Simon.
And then it saves my application history. It keeps that information within the system so that if I wanted to write an application on, Mrs. Sally client a year from now or 8 months from now, I can log into Simon. Do I have the ability to kind of extract and pull up previous information on that person? Maybe what I say, Rolodex info, name, address, phone number, etc. And so then I'm not recreating an application all over again?
At this point, not yet.
Okay.
But what it will do is that as you are working through the allocation process for that client, and you've already entered in that client's age and sex, and then you say, yes, this is the allocation I want, it will port all of that information directly into the annuity order entry system that firm is using so that you don't have to rekey it all. But we don't currently have a way that, okay, save this case, and then 9 months later, client walks back in and says, we were talking about this thing. Yeah, I'd like to do that. The rates would have all changed by then anyway. So you'd probably have to rerun all of the allocation dynamics anyway, just to find out. But that's a function we don't have yet today.
How does Simon with their analytics approach the renewal rate risk?
So that's always a challenge. We will show based on historical performances of whatever indexes and today's rates, what the performance would have been historically, to give you an idea. We obviously have to assume something about renewal rates. And so lack of knowing what else to assume, we just simply assume that the current rates will stay in place. I don't know any other way that we could do it that would really make sense. And so, that is something that somebody's got to be aware of, but that's going to be true with any illustration they're going to run with a carrier as well. They're going to have to make some sort of assumption as to what rates are going to be going forward.
What about income planning tools? Does Simon provide anything on that in terms of, guaranteed income calculations and analysis?
Yeah, we have built in an income calculator. So if it's a product that has an income rider attached to it, you can enter in the information on the client, when their age of which they're going to purchase it, the age of which you expect to start income, and we will provide what's essentially a heat map that shows here's how much income they'll get at that particular time. And you can then move around, say, what if I wanted to put in a little more money, or I wanted to wait a little bit later to start the income, or a little bit sooner? You can see how that will impact all of the income amounts as well.
One of the tools, I think you all were involved at one point within Raymond James, was creating kind of this heat map. Do you remember that?
Yes, actually, that was all as a suggestion of Producer's Choice, saying, hey, we need this heat map. And so we had.
Yeah, of course it was.
Yeah, of course. And so Raymond James had a couple of their kind of IT, they weren't IT people, but let's just say they were really smart young kids who could figure stuff out. And they kind of built this tool with a heat map, but it actually came as a suggestion from Producer's Choice.
And Simon has a version of that or something?
Yeah, but something very similar. Yes.
Wow. That's fantastic.
See, Producer's Choice was ahead of its time.
in more ways than one.
Scott, just to take a step back, what are your thoughts? And so, right, with advisors that are leveraging Simon, most of them are doing or predisposed, right? But they probably are doing some annuity business today. And I think as an industry, we've kind of leveled off at the number of, right? A lot of the business in our industry has gone advisory, fee-based, focused on that investment management and that kind of RIA shift. How do we bring more advisors to leveraging annuities and insurance? And how can Simon be a part of bringing advisors to leveraging these products and tools?
Well, Jamie, my answer is probably not going to satisfy you much, because after 38 plus years in this business of everybody trying ever since day one to get these, whatever the number is, call it 70% of the advisors that don't do annuities to do annuities, I've kind of concluded that they're never going to do annuities, that's 70%. And so, but there is two things that I hold out hope for. First of all, if we finish building at Simon exactly what I think we're going to build, then it will be far easier. And therefore, I think we can eliminate a lot of the obstacles that people say in this business is just too hard to do. Okay? Now, realistically, I think the 60-year-old advisor who's been in the business 30 years and never done an annuity is not going to do one, no matter how simple you make it. But there's a new generation of advisors coming into the business, and they're coming in, from my perspective, with for a different reason. I got into the investment side of the business because I love stocks, bonds, the markets, etc. It was an investment oriented thing. It wasn't about insurance and annuities. I just kind of got defaulted into that and never left.
Me
but
too.
Most advisors came in because they wanted to be investment gurus, etc. And that's not exactly the profile for an annuity person. But today's younger crowd, they're coming in to solve financial problems. They're going to be geared more towards, whether it be wealth management, financial planning, whatever you want to call it. And annuities are an important part of all of that. It is difficult, as we all know, to build a retirement income plan for the vast majority of the people without providing some additional guaranteed income. And so, it is a solution that people are going to need. And so I do believe that the new advisors coming in are going to be much more open to doing annuity business than the ones that started 30 years ago.
We need client relationship development plans for millennials and Gen Xers advisors. That's what we need.
Yes.
Forget the boomers.
And then build an index annuity around cyber currencies and GameStop, and we're ready to go.
Yes, AMC, GameStop, and Dogecoin volatility control index.
I think that's an oxymoron. I mean,
can you imagine what the pricing would be on that? You'd now have no chance of return. So great segue into, let's talk a little bit about being a fiduciary, what that really means. You and Blair O'Connor, founder of Producer Choice, you were involved with this project from 2 administrations ago, during Obama at the end of that, and that sunsetted, but now we're dealing with this, and not that it's gone away, but it's kind of boiling to the surface again. So can you do a then quickly and then a now discussion, and let's just talk a little bit about what it really means to be a fiduciary and how it's having an impact, in the insurance world specifically.
So the biggest part of any fiduciary discussion is to be unconflicted, give unconflicted advice. What is the biggest conflict that exists within the investment/insurance space?
C word.
That's correct. Commissions. Right. Now, I personally think that the Department of Labor could have made it a heck of a lot easier on everybody, and they could have done the whole DOL rule with just basically one sentence: no commissions allowed. Right? They didn't really want to do that. They didn't want to dictate that. So they end up with a 1,000-page rule that has simply said, yeah, you can do commissions, but we're going to make it really hard for you to do commission business, because you're going to have to prove to us and anyone else that asks anywhere down the road that recommendation you made was not because of how you're paid. And it's all because of what was in the best interest of the client.
Mm-hmm.
Now, I always thought that really whether it be the Department of Labor's original rules or even the Reg BI rule that we all live under was really more about bringing other commissionable package products to the same level of annuities. Because if you think about what we've been doing with annuities and suitability for the last 15 years, everything is built around the assumption that, well, so many people are recommending annuities because of the high commissions, which create the long surrender charges or the high fees. We hear this constantly from the regulators and in the annuity critics. And so in my mind, all the suitability rules on the annuity space have been about this issue for the last 15 years. So I never felt at Raymond James that even if the DOL rule wasn't in place, there would be that much that the annuity space had to do because of everything they did already. I think there is already on the annuity space plenty of suitability compliance work around this whole issue of commissions. Eventually, though, they're going to chip away. The regulators, in my view, will chip away at all of the commissionable business because I don't think they like it. I think they like the advisory business better, where you're paying for the advice, but not the product. And so I think we will continue to see less and less commission business done, and that there will be a day that there will probably be within a firm like Raymond James that they probably won't even offer commissionable annuities anymore. I don't know when that'll be. I've got a prediction that I've made, but I'm pretty sure it's going to happen. I might be early, but at the end of the day, that's kind of what the regulators want. But as long as you can prove that you're not doing it based on the commission, then it should be fine. It just is a burden to be able to have to prove it.
And the other challenge too is we got a few minutes left, but just the 50 states, right? Insurance falls under the onus of the insurance commissioners, whereas security is not the case. And so you've got this fragmentation of state law and certain states communicating to each other, playing in the same sandbox. And then, of course, there's dramatic outliers, and it doesn't create clarity.
That's definitely correct. And if you look at any application, I mean, part of the reason for some of these apps are so long is that there's certain language that's in there for certain states. And, because they can't agree on what it all should be. And so, there's no question. It's a regulatory quagmire.
So when does this does it get federally figured out that all insurance conforms to this? Do you think that'll happen?
I really don't, because the states will never want to give up that power and the jobs and the revenue source it creates. And so, there's been talk for years about some sort of federal authority, but I think all that would end up being is there'd be one more super regulator in addition to the 50 state regulators. So it would only work and make sense if we could get rid of the state regulation. If perhaps the insurance companies could file as a federally regulated insurance carrier, thereby making them exempt from state laws as opposed to the state. But the states will fight that.
Yeah.
The bitter end.
All the way to the end.
Yeah.
Yep.
Yeah. Well, thank you very much for your time.
My pleasure.
I appreciate you enlightening us a little bit more about Simon and chatting a little bit about the world of annuities.
Anytime.
You better watch out for that offer. Let me ask for you to come back. We're going to tear chapter by chapter through unlocking the annuity mystery.
That's right. Did you get to the final chapter that unlock the entire mystery? And you're like, it's basically a whodunit, right? Since maybe I could sell more books that way if I kind of said it's fiction instead of nonfiction.
We look forward to your next book, the consumer-friendly version.
Thank you,
Jamie. Thank you. Scott, thank you. Till next time.
You two have a great day.
You too.